Hey fellas, happy Friday. How y'all doing?
Pleasure to be here, man.
Team
What a
team
month.
team Trump or team Elon, Steven? Or team enjoy the show.
Oh my God. Crazy, right? Like, what a, what a high profile breakup. It just like, it's funny just watching like every asset in the world sold off because they're breaking up. It's so funny. It says something about markets in this day and age.
I don't even think we gave them like a couple's name yet, did we? I didn't see any good, combination of the name. Can't think of anything good off the bat. Mump. I don't know.
It was hard to go to sleep last night because the memes in the Twitter feed were just endless.
Yeah.
So, if I'm looking a little tired, it's just because I couldn't pull myself away from the Twitter feed last night.
Yeah, the group chat was popping off with all the best ones.
Steven, was this coordinated or what? What's the intel?
So I thought that initially before the Epstein tweets, I was like, maybe this is strategic. Maybe this is like Elon needs to leave. He knows he's going to kind of be under a lot of pressure as a public company CEO unless he kind of distances himself from Trump. He's taken a lot of damage with Tesla. And so at first I thought it's like, okay, like they're organizing a public breakup so Elon can go back to his former life and try to unwind some of the damage. After some of those tweets, I'm obviously walking that back a lot. I'm not as sure on that one. I think probably not. Although you have seen like Europe suddenly likes him again. There really was like a swing, and these people that he's alienated now like him. So I mean, who knows, man? I mean, maybe it was all a plan, but I would put the odds on that pretty low at this point. I was going to say like 60-70% chance in the beginning. As it escalated, though, much less sure.
I was thinking there's like a couple interpretations. I do lend some credence to what Steven said because that does more than what's on the surface. Because to me, it's like, I don't think Elon is a dumb person. I don't think he actually believed that the US fiscal situation or even the trend could have been radically improved in like 4 months. That's one thought. But then the second thought is maybe Elon's not listening to enough Bitcoin podcasts. And maybe he's truly in the dark on this topic.
I mean, he tweets, Austrian economists a lot. I truly believe, because I do think some of the analysis yesterday is, Elon's a very earnest person, right? And Trump's definitely not, right? And more principled, I would say, obviously, than Trump as well. So they kind of operates from this place of like very, very mission driven, principle driven, and just says what he thinks, right? And I think he's naive. I think he's naive about being able to get the deficit and the debt under control. I think he is. I think he genuinely thought that he could dive in and help out in an earnest way, and that he's actually just quite naive about this fact. I don't understand why he's immersed in this thought. I know he's been exposed to it. He, like I said, he's tweeting these Austrian economists, so he understands like sound money principles. And he just hasn't connected the dots that it's out, it's gone. Nothing stops the train at this point, right? So you've got to think outside the box, think from first principles, which is also something that he ostensibly is very good at and prides himself on. Always taking things down to physics first principles. I think he needs to understand that you just got to fix the money. You got to get down to the root of the problem, which is the broken money. I'm just blown away that he hasn't figured it out yet.
I'm inclined to agree with you to a certain extent. I think he really did think in almost a naive way that this was a problem that could be solved. My reasoning for that is like, it's a very enterprising techno-optimist sort of thing to think. And what I mean to say is Elon is the type of guy that thinks, oh, Twitter's not working well. I can just come in, I can rearrange things, I can, trim down we're going to fire a bunch of people, we're going to turn the revenue around, we're going to do these things. It's just a system that isn't optimized right. Like he thinks in terms of systems, that it's engineering, that if something isn't working, you just need somebody that's smart enough, that's willing to come in, willing to take some risks and turn it around. And that's what he's spent his career doing in many ways. The
But
problem,
he's missed the analysis, because the analysis is it's the money that's broken, and the risk is I need to go all in on Bitcoin. Right?
and it's further. It's just that like the political whole is not an engineering problem. Like even outside of like the Bitcoin component, it's just not an engineering problem. It's not. It is a system of political ties and inefficiency and patronage and blackmail, and like it's not engineering. It's human. It's political, and you can't engineer your way out of it.
Yep.
I also think there's a big miss on some of these takes that were showing tweets of Trump from like, it was literally from like 2012, 2011, 2013, talking about balancing the budget, this debt problem. And on the one hand, I understand that should be highlighted. It's like, hey, he's the president and he was saying this back then, he's saying this now. But they were like, oh, look, one tweet was like, if Trump spoke like this, he would win in a landslide. And my take is like, you literally have it completely opposite. He was able to say that when he was not a politician 12 years ago. Now he is a politician. He's trying to win a national election. If that logic was true, then Ron Paul would have been president.
Yeah.
Rand Paul would have been president. Thomas Massey would be on the ticket. Like, and they're not. You don't win a national election in a landslide by saying, hey, I'm going to cut Social Security, Medicare, Medicaid, and military spending. That's
Exactly.
not a winning message. So like, I think the takeaway there is I'm not saying it's good that the politicians are just kind of letting the train run forever, but you have to remember what the voters actually vote for. They don't vote for austerity.
No.
Never.
And it's like I don't know. I look at it as they tried. It feels like they tried. They almost tanked the stock market in the process, right? We were down 30% on the S&P. They tried to kind of engineer some of the trade balances and cut spending and Doge and all these things. And like, I don't think it's just that Trump signed this bill. I think that there was just fundamental violent pushback from every faction, from everywhere, both investors, politicians, all of these, just all of these zones. And, I think the thing that the administration realized is like, you can't stop the train. You just can't. You tried, you can't. Because it looked like they were all in on that messaging. Bessent, Trump, everybody was like, hey, we're going to cut spending. We're gonna reduce the deficit. We're gonna lower rates. We're gonna refinance the debt. We're gonna like get this thing in order. And I think they just realized the pain of doing so is a greater price than any politician can easily pay. And
JK, we're going to pass a massive spending increase and pressure Jerome Powell to raise or lower interest rates by a point for rocket fuel instead.
Run it hot.
Yeah. So anyway, welcome back everyone to Swan Signal Live. I am Brady, your host. I'm here with my friends from Swan Private. Matthew Gillette is with us today. Of course, the regulars, John Haar, Stephen Lubka. We're going to get into all the things. I just want to thank Mara really quickly for securing the Bitcoin network and for supporting this show. Thanks also to BTC in DC. Swan's working with George Washington University and BTC Prague to put on an awesome conference in DC. You can check it out at btcindc.com. Coming up late September this year. It's going to be a really unique one. And of course, always brought to you by Swan Private. We are here to help you build generational wealth. And these three guys know all about it. We'll hear a little bit more about it at the end of the show, but let's dive into to some market stuff, John. We'll kick things off. Where do you want to start? We've got plenty to talk about. Definitely want to get into this James Lavish clip talking about leverage and debt. We've got the Groman tweet, which is, I'll just bring this up. Actually, this is kind of a continuation of you can't stop this train. We have shown this chart on the show before, right? And this is what John was talking about. Like you can't, it's not a party's not going to win, office. Maybe you'll get one person or something in like a small district. If you can like really make it work, you can get like a libertarian elected, but you're not going to win as a party, one of the two parties in this country, by promising to crush entitlements, promising to crush defense, promising to crush U.S. treasuries or raise interest rates, et cetera. All that stuff is not going to happen. These are the expenditures here for the U.S. government. Starts out with HHS, then Social Security, and then the Treasury financing interest payments, and then defense. So this is what Lynn means. Like you can imagine those columns are the train, and they're just not going to stop going up.
Yeah, I would say the kind of big themes of the show are just markets and Bitcoin related markets in general right now. It's going to be this talk of, the Bitcoiners know it as nothing stops this train. Even if you don't know that meme, I think traditional investors are realizing the same thing, that it's going to be a continuation of the trends that have been in place already for several years, if not decades. And so, yeah, the Trump Elon breakup, is whatever we're calling it, is related to all this as well. Yeah, so I think it's on the radar of traditional finance people as well. And I guess one thing I would just point out is, like what you guys were saying a moment ago, they did try. And in my adult lifetime, this is the most serious any elected officials have been about changing some of these trends. And if you find out within 5 months that they're really not going to be successful doing it,
Yep.
then I don't think you're going to get someone to actually change it. So to me, this is like the validation of nothing stops this train. And just to elaborate on one thing in that Groman chart, the Groman tweet, his text, and Lynn's careful with this too. She's like, it's theoretically possible to stop the train, but it results in crushing entitlement spending. And that's just politically and socially unpalatable. So that everything around nothing stops this train, that's a theme of the show today. And then I think the other one will be the Bitcoin treasury companies. Those are not going away either. There's hot takes on them left and right. There's a lot of people talking about whether those will be the cause of the next Bitcoin cycle.
Yep.
And that feeds into a discussion of what even is the next Bitcoin cycle. So I think that's all stuff we could get into today.
Yeah, man. It's on the nothing stops this train. It's a good point. It's not that it's theoretically impossible. There's two things. You could either crush entitlement spending, defense spending, but that's just not going to happen. You can't do defense because, you can't, and you can't do entitlements because, people, it just, politically, as you said, is infeasible. The other way is a growth miracle, right? Those are the two ways. The second way is you have just an absolute extreme growth breakthrough. AI, everything, GDP is up 10% a quarter, for a couple years, right? That can work too. But I think the important thing for people to know there is these are just these tail scenarios that are very unlikely to happen. And the thing we're most likely dealing with is just this increasing level of spending and increasing debt burden until the system changes. And so it's if you try this approach and you try to rein it in, you try to rein in the spending, you try to rein in the deficit, that doesn't work. What's left? In my opinion, what's left is you need to use the resources and power that you have to ensure that in the next system, the US is in a favorable position, right? That's the only card that's left. You need to make sure that the end of this system and the transition to the one that follows it is on your terms. And I hope that is what happens. And I think Bitcoin is part of the story there.
Steven, did you see the tweet? Somebody tweeted, even at 10% GDP growth and with a productivity miracle, it still take years and years and years to do this.
Yeah, I believe it.
Yeah, I haven't run the numbers, but it seems like this government's going to do what every previous government has done, which is print the money.
Yeah, you have to have, it truly is a miracle that has to happen, right? It's not you need to have a growing economy for 5 years or something. You need something we've basically never seen before, something akin to the Industrial Revolution at scale has to happen. And, I hope it does.
AI, AI is certainly capable of doing that.
Yeah.
But there is even a risk in that scenario, and Groman has talked about this. It's ultimately good. You want a more productive, efficient, innovative society. That's the direction you want to head for sure. But even if that one comes too quickly, then it's not all roses, because then you have a lot of worker displacement, industry displacement.
Yep.
And like people can't necessarily just pivot from one job into like this brand new productivity miracle industry. Again, ultimately over the long term, productivity miracle is good, but you might have some issues on your hands where it's like people are displaced and you have to retrain them. And then you have debates over like, do you do a public works retraining? Do they all just train in the private sector? So
I mean, I think that's absolutely going to happen, because I mean, it's, if you think back like hundreds of years, right, and even more than that, thousands of years of human technological advancement, you could start the exponential curves for tech like way back, like early tech, and it, you know, the adoption curves for them, you know, going out over centuries and, you know, millennia. Now those curves are happening in like decades, and now like 5 years, 2 years, 1 year, 6 months, and it's so compressing. We're actually finally at the elbow of like the grand asymptote of like exponential technological advancement of humanity, and like that's where we are now. Like we are in that moment, that you know, singularity inflection point, because we don't know what happens next, and it's going to happen so fast, and it's going to happen over the next 10 years. Like we're on the cusp of it all happening right now. It's going to change everything, and it's going to be massive job loss, and it's going to happen way too fast for it to be anywhere near like controlled or like comfortable for humanity. There's going to be a transition period, and it's coinciding with the loss of like, you know, trust in institutions, the fourth turning ideas. Bitcoin is here disrupting the monetary system itself, which is one of the fundamental base layers of our civilization. So it's all happening in this, you know, decade window, kind of starting around now when AI is like approaching sort of human level Turing test. Like these all pass the Turing test now as we conceive them before AI, right? And it's just, you know, every month, massive advances in the capabilities of these technologies. Veo is making beautiful videos, right? That are almost indistinguishable from reality. And yeah, anyway, it's going to happen super fast. I think that's why we need Bitcoin. We've been talking about that for a long time. During this transition, talked to Jeff Booth. He's thought a lot about this. Like, where is technology going? We're moving into a more deflationary period, because the actual deflationary effects of technology is going to subsume inflation. You know, it's still been going a deflationary tech despite all of the inflation that's been happening. And we're going to get to the point where we have this abundance. It'll become more evenly spread over time, and we'll have to work, like we won't have to work nearly as much, and we'll have access to, you know, all the things we need to survive a pretty abundant and pretty cheap. And Bitcoin will naturally fit into that deflationary world. It's crazy, guys. Like, I mean, I sound like a prepper, you know, like people who build like, you know, a bunker, but I feel like, you know, I'm not building a bunker. I'm with my family. I am taking some measures to try to, like, expecting some bumpy times for my kids as they get in their late teens and 20s and stuff, and try to enter into like the world independently. And I think we all need to do that. Bitcoin's a big part of it.
Yeah, absolutely. I think, you know, I think it's those two things. Like if you're the US right now and you're trying to prepare for the century ahead and a changing system, it's huge CapEx investments into AI, and it's buying Bitcoin. It's owning, you know, neutral reserve asset for the next hundreds, thousands years. Buy that asset. And then also it's like huge investments in, you know, in AI. Like you want to have sovereign capacity there. So I think like that's the move. You know, if you can't stop the train, you've got to print the money, you've got to go through it, and you've got to, you know, acquire compute and acquire Bitcoin. I mean, I think that is the answer.
Yep, that's well put, Alchemist, in the chat. The pace of change in AI far outpaces the capacity for human adjustment. I think that's true.
Yeah. Yeah.
What's next?
Want to talk?
Anything else on AI? We can move. Let's play this clip from Lavish, James Lavish, on what Bitcoin did with Danny Knowles, and
And so the issue is that you start seeing companies closing, defaults, and it kind of rolls, because then you have this guy default that might trip somebody else default, and then, you know, because you have this guy's depending on this guy, so there's some contagion there. And then you just start getting people laid off. And they start getting laid off these companies. Unemployment starts to rise. You go into a recession, yet prices are still going up. And it's awful. And that's, that's where the stagflation is. You've got the market coming down, prices of everything going up. Investors will flee to things like gold. And I think they would flee to things like Bitcoin because you still have inflation rates rising. Now we're running such high deficits, fiscal deficits, and you get into a recession, it just makes the deficits wider. The whole world, it's not just the US. I mean, our whole foundation is built on borrowing, leverage, and debt. And so that means that you must have expansion of leverage and debt to keep going.
Yeah, this actually kind of dovetails back into the same conversation. It's like another scenario, the stagflation scenario.
Yeah.
What do you guys think about that possibility? You get the hyperinflation, the kind of stagflation, and then deflation, driven by tech and maybe the monetary forces of Bitcoin. What do you guys think is how's it going to play out with prices and leverage and debt and everything in the next like 10, 15 years?
Yeah. So, I mean, kind of going off what we just said, I think AI saves us from the worst of stagflation. You know what I mean? Like to be really like all in a stagflation outcome, you have to be predicting a really slowing economic time. And I do honestly believe AI saves us from that. I do honestly believe that like having this technology coming online does boost GDP in a big way. Will you have inflation? Yeah, you'll have inflation, but it's also this fiscal driven stuff. And I think it's a novel environment. I think it basically doesn't, I read a great thread on this, but it like doesn't compare to stagflation in the past. I think stagflation in the past, which was not fiscal driven and it was in much less advanced economies, I think will be understood as a different thing relative to like what you might see today. In some ways, like the inflation rate is a political choice for the US. It's choosing how much to print, how much fiscal spending, how much to bring to market. And I think they're gonna, and it's like even the GDP growth there is kind of in like nominal terms in some ways, right? Like as you bring, like the thing is like you raise the inflation rate by printing the money and spending the money, but then in doing that you raise the GDP because the GDP is nominally determined. Real GDP might be negative, but I think GDP will not be. I think you probably don't get into it, at least on a technical term. And like you can argue with that and you can say like, oh, that's not how we should be thinking of it. But like, welcome to fiat.
Welcome to fiat.
Yeah. Did we show the Trump rocket fuel tweet yet, Brady? If we have, I think we should just show it.
Here it is.
Yeah.
Yeah. I have not confirmed.
I didn't know this was real. Holy!
I haven't confirmed. I haven't confirmed if this is real or not. It's too good. It's one of those that's like certainly plausible, right?
So I don't have a Truth Social account, but there are accounts that reliably, at least historically, repost what Trump has posted to Truth Social, and they did repost this one to Twitter like 4 hours ago.
Yeah, that's probably a good signal.
Yeah, as far as I know, this is a real tweet. And Brady, you kind of I didn't need this one over my head, but maybe Trump using the word rocket as he's like having a spat with Elon. Like I don't know if that was intentional or not. But people have been talking about this run it hot thesis for now, some people have been talking about it for months, but now it's even more common to talk about it over the last few weeks. And the president is literally tweeting rocket fuel ! So if you needed any more confirmation that we're in a run it hot environment, I don't know what to tell you.
It's real. I just found it.
There you go.
Incredible.
Rocket fuel.
I did not think that was going to be real.
So
let me for a full point.
Yeah, I will just say one thing. This is kind of like the tariff stuff where I'm not necessarily defending Trump, but he has been consistent on this stuff. Tariffs were not a secret to him. He didn't keep them a secret to other people, and people were kind of surprised when he followed through with tariffs. And same thing with this. When he was campaigning, he wasn't even elected yet. The All In podcast asked him, what are you going to do about the debt? At no point did he say we're going to reduce spending or outright reduce the debt. He only said we're going to grow. So like he hasn't lied on that one. Just for clarity there.
Yeah, totally. I mean, he's been consistent in many ways.
I was gonna say, yeah, this system is, could probably go on for another decade or two, to be honest, just by debasing everyone. But to Steven's point, best case scenario.
How long can you kick it down the road? Yeah.
How long? And to Steven's point, best case scenario would be like some combination of productivity and then, not the whole scary fourth turning kinetic war side, but more like bit bonds, right? Something positive.
Yeah. People are working hard on those. Shout out BPI.
Yeah. There was I threw this in here for a quick hit at the end, but there's a Russian bank that is issued a structured bonds tied to Bitcoin. This is, as I understand it, the largest bank, Russia's largest bank. So, I mean, this stuff's happening all over the world. And this idea is something actually, I think, and we haven't really gone in depth into bit bonds on the show. We should do that maybe next week to really talk about it. And I need to learn more about it as well as part of that process. But
I think, Brady, it's worth mentioning that one of the headlines out of the conference, and this one didn't go too far. People didn't get too excited about it. I think rightfully so. Was Eric Adams, his big reveal was that he's going to try to have New York, at least New York City, I would imagine, maybe New York State, try to issue incorporate Bitcoin into their actual bond issuance.
Yeah. And
I think it didn't get too much excitement because a lot of people correctly, in my opinion, realized that the odds of that happening are super, super low at any point in the near term. I would say that I think it'll be a state or a local government that does this bit bonds concept before the US government. That's my personal forecast, because the US government has to deal with the perception of being the currency issuer. Yeah. And that's a huge, huge hurdle for them to say, hey, we've got to put Bitcoin in our bonds now. Yeah. That just sends a bad signal to the world. New York City doesn't have to worry about that. But even with that said, like after Eric Adams made the announcement, there was like another comptroller or something like that came out and just said, this is never going to happen. So I think we're years away from a major city or state actually doing this.
That would generally be my, I would generally agree with that. Probably that's base case. I have had some conversations with some people that are working close to this, and it does seem like there's a surprising amount of traction. But again, it's a huge thing to get across. You were saying a few years for city or state, or a few years for federal?
I would still guess like 2+ years for city and state, and I would say federal comes even after that.
Yeah, man, it's easy to agree with. Like that is my gut check of like how much it's going to take to get this thing through. But sometimes I talk to people working on these with admin, and I don't know, it gets me more bullish.
Yeah, I'll be happy if I'm wrong there, but that's my current forecast.
Yeah, let's talk about treasuries more then.
Let's do it.
Yeah.
Hot.
Yeah, super hot, super hot. Best VR game ever, by the way. Super hot. If you know, you know.
It's excellent. It's so good.
It's so good. It's
oh
just
my
so
god,
good.
that's crazy. I love that thing.
Yeah, it's amazing. Go play super hot. Super hot.
I do not know. I'm not in the know there.
Yeah, it's good.
We'll run through it, but it is like the single best VR game I've ever played. It really is excellent.
Yeah, try it out. So very hot Bitcoin treasury companies. Yes, there's a lot of chatter out there, speculation. Like this is the next ICO. This is where signaling the blow off top is coming because these are ramping up and there's mania and leverage building up in the system, et cetera, et cetera. We talked about in this show like how much demand is out there for these products, right? How many companies are going to be able to do this sustainably? So let's talk about some of those ideas. Are you guys concerned about the just rapid kind of advancement last 6 months of large Bitcoin treasury company plays and leverage Bitcoin equity plays?
So let me get my spiel here real quick. So first, there's a great tweet, if you want to pull this up, from Alex Thorne. I was just trying to grab it. He did a kind of debt analysis on the treasury companies.
Oh, this one, I think, right?
Exactly. Like there just isn't that much debt, and it's not due for a while at all. Like, and so like you can totally have a thesis that's valid that says the way this is going, I expect that these treasury companies are going to lever up excessively, and then at some point that will blow up. And that's fine. You can say that, but we're not there. You can't really argue that we're there. There's not enough. There's just not enough in the system, and these numbers actually aren't big enough. Like, even if you look at like if MicroStrategy had to sell all of their coins over a few months, it's not that much different than like the wave of short-term holder sell pressure that we saw in this like last couple months. Like, it's big, it's material, it would drive things down, but it's like I think it's less than people think. And obviously that scenario is not playing out. They really can't be forced to sell in that way. But anyways, the debt isn't there. I think what is happening is like everyone is seeing how hot these companies are, how much money is flowing into them, how much they're running up like crazy. And this started recently. I had a tweet though that was like, in my opinion, there's only really two treasury companies in market. There is MicroStrategy and there's Metaplanet. They're like operating at scale full blown. There's then three big ones that got announced, Nakamoto 21 and the Strive play, the Donald Trump thing followed. And there's like there's a small collection of international companies like SWC and like AltBG or whatever, and Hong Kong Asia, right? But everything I just listed is just, they're not really operating at scale yet. They're still spinning up, etc. So like we're really early there in terms of people actually doing things and deploying and getting spun up. And I think people are seeing these price increases and it's suggesting froth to them. But like, you guys need to remember what 2017 was like, what ICOs were like, what like that stuff continued for a year until there was no one left to even call for like a crash in a certain sense. I think we've really only seen the strong price performance for a month or two. And I also think this is a data point I watch, like the crypto traders are not in on this, and they're relatively close to Bitcoin. Like, you go on crypto Twitter and they're not really even paying attention to these treasury codes, let alone like traditional investors, retail investors, Wall Street, except for trying to line up fundraising for them. So my take is that it's actually pretty early, and people have kind of PTSD.
But Steven, there's 150,000 people were at the MicroStrategy or the strategy live stream, right? So there's definitely retail investors who are taking note, and maybe they're not like your average retail investor. They're like engaged investors, right? You know what I mean? I wouldn't say it's like blow off top retail investor. You know, everybody's putting $10 in kind of thing. But there's a lot of people outside of the industry and that are buying these stocks.
For sure, like that's not wrong, but like I feel like most of those people are kind of like Bitcoiners, you know what I mean? Like they're kind of Bitcoin. They're people, like that's the line I'm trying to draw on, is there's the people that watch Bitcoin. And right now it feels like only those people really know what's going on here.
Fair enough. Yep.
People don't, and the people that don't know what Bitcoin is don't.
Yep. Yeah, that makes sense. There's certainly 150,000 Bitcoiners out there who would tune into that and are investing. It's probably 500,000, 1 million people invest in those stocks. Bitcoiners investing in those stocks now. Totally. Easily. We have 50 million people holding Bitcoin in the country, which I, kind of like doubt that number. It's probably very technically true.
Yeah.
But there are millions of Americans who are interested in Bitcoin at this point and following things, relatively closely.
Yeah.
And some companies may blow up in the future, right? But it doesn't mean it's going to send Bitcoin down to $5,000, right?
Yeah.
Yeah. One thing I also hear, and John, you can take a shot at this, is, what if Bitcoin does another 80-85% bear market, and it drags out for 4 years? Like that question, Saylor gets that question a lot, and he answers it well. But what is the answer, in your words, to that? Like, what risk is strategy at if a scenario like that plays out?
Yeah, I mean that is like the extreme. That is a way that these companies, I don't know if I would say outright, completely fail, but like come close to what most people would deem to be a failure. But I would also turn it around and say to anyone here or any Bitcoiner, if Bitcoin is down nominally over 4 to 5 years, so something has happened, right? Like I don't know what is causing that, but that's not the Bitcoin thesis is not playing out. So, and that doesn't mean the Bitcoin failed as a project entirely, but like the thesis was a failure. So that to me is kind of like a throwaway. Sure, if Bitcoin basically fails as a thesis, then these companies fail as a thesis. But the bear markets we have had in the past, let's call it 80% drawdown for 1 year, and then kind of a slow recovery from there. All these companies, the way that they have designed their strategy now, would be perfectly fine. They wouldn't have to sell a single Bitcoin. And I think that's lost on some of these people. They're thinking of these kind of like, miners selling in the past or super leveraged players selling in the past. And when the Bitcoin price does drop a significant percentage in a short period of time, they get liquidated or they have to sell themselves for some reason. That's not how these Bitcoin treasury companies work. Now, if you see some like really stupid behavior, there's a new Bitcoin treasury company that issues 1 year secured debt and they truly can get liquidated, then like, sure, that could cause a self-reinforcing negative feedback loop. but to Steven's point, there's only 2 companies that are like actually pulling this off and like making recurring purchases. And the other ones that have announced, they have no plans to be idiots about this. Like they're going to do it so that it takes a 4 to 5 year bear market in Bitcoin to make the strategy fail. And then I would come back to my other point, which is like, if it's a 4 to 5 year bear market in Bitcoin, then something's wrong with Bitcoin.
Yep.
Yeah. No, I think that's, I think that's totally right. And I think the other point here that I'm always trying to land with people is like, there's a precondition to seeing this sort of treasury company blow up. And the precondition is the price of Bitcoin needs to go parabolic first, because first they need to cram all of that debt into it. You know what I mean? They have to first take the debt, and then they need to buy Bitcoin, and they need to send it much higher. And only from that high watermark can there then be this kind of leverage event. So I think it's also the reason we know like we're just not there is like we just haven't seen that sort of run up. There's not enough debt. And we haven't even seen the impact of all of that debt and cheap financing being crammed into Bitcoin.
Can we show the Pierre Rochard tweet? I think he just had a good way of summarizing
Just about to pull it up. Yeah, here we go.
Yeah, just from this morning.
Yeah. Go ahead and read it, John.
Yeah, I'll just read it. It's not too long. The bulk of future Bitcoin treasury company leverage is more likely to be in retail equity investor margin and derivatives than actually inside the companies, meaning that liquidations would cause forced selling of equity, not of Bitcoin.
That's the key right there.
That's the critical part there. This would be a structural change from the past where leverage was on Bitcoin directly. Equities would be a shock absorber and dampen Bitcoin volatility. The current consensus narrative is the opposite. And he's referring to this idea that people keep saying, look out, Bitcoin treasury companies are the next blow off top. And then I think Steven had a really good point of like, even if that thesis plays out to some extent, it's like by definition, you have to see the parabolic rise first. And we clearly have not seen that.
Yeah. That Pierre tweet is incredible. What a great take. He's completely right. I love it.
He, as Pierre does, he nails it in like just a few sentences.
No, just fantastic point. And like, that's the thing that I come to really liking about these companies. Like that's a great, like, oh, it's actually shifting where the leverage is and protecting Bitcoin in certain ways, or at least that's a view you can have there. I think that's interesting. Another view along that line that you can have is that, it's absorbing all the speculative flows that would have gone to crypto and it's diverting them to Bitcoin. I think that's the other cool thing about it. The people that want to earn excess returns on top of the Bitcoin rate of return can do so via these treasury companies instead of buying ETH and Solana and meme coins. Those have kind of, I think, damaged themselves in the process. There's nothing really attractive there. But these companies are delivering enough returns that it's not even interesting or worthwhile to go. And I love that, you know?
The degens have all the options they need right now.
Well, and so people started saying that I'm like, this has been said many times. I'm far from the first person to say what I just said. They were saying that originally with like MicroStrategy call options, like, but that was even before MetaPlanet. That was before like AltBG and SWC, and like MetaPlanet's up like 20% today alone. It's bananas. And so like if you want that high, you know, just that beta on top of Bitcoin, you just buy these companies, or you buy the options, or you take some margin, you do whatever. You really can get, you know, as levered as you want here. Not saying to do that, but there's no reason to go into crypto.
Yeah. All right. Any other thoughts on treasury companies, guys? Are we expecting? I mean, we are expecting. There's going to be more news on this front, like the rest of the year. It'll be interesting to see how it plays out. But we've got three new big players on the field, 4 if you counting the Trump media, and we keep seeing smaller businesses pop in and say that they're going to be stacking for their treasury, which is not necessarily like they're going to be leveraging it, but just your good old fashioned stacking sats into the treasury is also catching on.
Totally.
Yeah. I would just add maybe one other thought, which is I think that there's, you know, some people looked at during the conference, DJT stock ticker announced their strategy. The stock kind of didn't rip. And I think some people said like, oh, maybe this is getting saturated or something like that. I really don't believe that's the case for a few reasons. One is that it just what Bitcoin is relative to what the dollar is, like that hasn't changed. And I'm always reminded of Saylor's quote where he said that they bought 300 million of Bitcoin. It took them 30 years as a company to accumulate that much to buy it. Then over 4 years, they tapped debt and equity to buy 10 billion. Then over 4 weeks, they tapped debt and equity to buy 15 billion. Like whether we like it or not, the fastest way to accumulate Bitcoin on the best terms is tapping debt and equity capital markets. And none of us as individuals, I don't know, you guys tell me, can you borrow $1 billion on a convertible note at a 0% coupon? No, you can't, but a corporation can. So
that's why we started Vibes Capital Management.
Only elite, reputable institutions like Vibes Capital can borrow on those kind of terms.
You can just meme things, guys. You can just meme things.
So I just don't think this is going away anytime soon. I'm not saying every stock is going to be successful. I'm not saying MNAVs just always go up. Like I'm not saying there's not going to be waves or things like that. But the fundamental principles underlying this strategy are here, and they're not going away anytime soon.
Yeah. So, and on that, you reminded me of something I wanted to like mention is, you know, I have heard people make these comments of like, oh, this is kind of like ICO season. It's kind of like ICOs, but on Bitcoin. I said that myself, I think several months ago. It was like, whoa, this really is just like this interesting moment. And I get the comparison in certain ways, but I think what makes this different, or at least potentially different, it's two things. One, at the end of the day, they're holding Bitcoin, which is something which unquestionably has value and like provides an anchor in these companies. If just like you've got the Bitcoin, maybe there's premium on top of it, maybe there's debt, maybe etc. But you've got the Bitcoin. Unlike ICO launches that just had tokens from thin air that ended up having no value and could go to zero. But the other thing is like you have to have this theory that this is possible, and it's interesting. And like what that theory is that if we were, this is like this fucking Wittgenstein's ruler. Imagine what it would look like if Bitcoin financial services companies were monetizing out of nowhere under a fiat standard. And your answer would be something like this. Maybe that doesn't end up happening. Maybe that's not where these companies go. But I think you have to be somewhere where it's like, well, if there was this moment in time where the existing financial system, the fiat system, understood that, oh, wow, we really need to get this other asset on our balance sheet. We need to get this other base of capital. How would they start doing that? And what would that look like? It would look like exploiting every conceivable advantage that you have, arbitraging the weaknesses of fiat against the strength of Bitcoin. And that's what we're saying.
Speculative attack.
Yeah.
Which Pierre also wrote about very eloquently. And he does all that, did all that before AI. So it's not just him running his random thoughts through AI. He's really good at distilling the nuggets down. But yeah, it's a speculative attack against the dollar. And this is the largest kind of floodgate that has been opened in that attack, in my opinion, into debt markets. Obviously by far.
Yeah.
So it's just it's a way to get Bitcoin fiat into the Bitcoin system, I should say, like fiat value into the Bitcoin system at scale. Saylor calls it intelligent leverage for a reason. Watch his, if you're a doubter, he's great to watch in his earnings calls, his quarterly calls, investor calls, and he lays it all out there. Like it's all out there for you to understand, and it's pretty brilliant, to be honest. Stride was released. We should hit that real quick while we're talking about this. Stride is their new preferred stock offering. It IPO'd. They're raising $1 billion on the Stride IPO. Materially more demand than Strike and Strife. The BTC, this is from Jeff Walton, by the way, punter Jeff, who is part of the True North crew and hurdle rates. The BTC yield curve is born. MSTR is going to start spinning faster and faster. Prepare for the repricing of the entire fixed income market landslide of capital coming. What do you guys make of Stride? It's a preferred stock. I think it's 10% yield. Basically, and my take is Saylor's taking money from boomers who are too nervous or afraid to hold spot Bitcoin, and giving them a little bit more stability and using it to buy Bitcoin for himself. is that kind of what's going on here?
Yeah, I mean, I think this is a substitution for the convertible bonds, the convertible notes. So I think Saylor came to market and he's figuring this out for us. He's figuring out this strategy. At first, it was just take money, buy Bitcoin. Level 2 was, we can sell the stock at a premium, capture the difference and buy Bitcoin. Or actually level 2 was convertible notes. And then level 3 was the ATM. But as he gets going, he comes up with this plan, the 21 plan, the 42 plan, the 84 plan. And people realized really quick that he was able to get through the ATM very quickly, but he made minimal progress through the convertible bonds. He was only able to issue so much. And this is because he wasn't able to get the right terms for those instruments after a certain point. And it didn't make sense. And so I see these preferred shares as an alternate way that he is tapping debt markets. Convertibles ended up being harder. He saturated the convert market to some degree, and he realized he can just sell these. It's a way for him to get actual debt. He has struggled to get debt as much as he would want. And I think this is a really good way for him to do it. And it's a big deal. And I think he's kind of cracked the debt side of this equation.
Amazing.
Yeah, I mean, it's basically, you just have to remember there's people that want people. When I say people, I mean pools of capital out there, different types of investors that are willing to take Bitcoin exposure in the general sense of the word, but it's not spot Bitcoin. They're not willing to take that kind of risk from a price volatility perspective, from like a wrapper perspective. They want to own a security. They don't want to own a spot digital commodity. And they don't want the full price volatility that comes with that. So Saylor is basically saying, okay, you guys are okay with Bitcoin exposure, but it needs to look like this, and the risk profile needs to look like this. And there's different pools that want different flavors of that. And the latest flavor is STRD, Stride. And there's been a lot of good visuals on this, which, side note, it's just incredible how much good analysis happens on Twitter. There's like,
incredible.
It's unbelievable.
It's unreal.
Like within 48 hours of them announcing this, you have threads that are, I think, as good of quality as what would have been like sell side Wall Street research. That was like this very gated thing that only a few people see. And now it's just like, boom, Twitter thread with all the visuals and everything you could want. So it's just mind blowing. Yeah, there's one. It's basically a new capital structure. And so you can see how the STRD relates to the other preferreds that have been issued, and to the converts, and to MicroStrategy as the equity. And then, of course, the bottom of the pyramid's Bitcoin.
Upsized by 4x. Let's be clear. This says 250 million. It turned into $1 billion.
Right.
Exactly. So they came to market saying, hey, we're looking to raise 250 million. It's not uncommon for deals to get upsized, but upsized to that magnitude, to 4x what they initially came with, is a big deal.
And substantially more than how much STRK and STRF got upsized. They got upsized a little bit. This was dramatic.
For sure. So there's still, they're not done pulling off this playbook of going around the world and tapping into different pools of capital that have different mandates, different risk profiles. Get used to this, because they're going to keep doing it.
There seems to be a huge appetite for this, and a really large addressable market.
Absolutely. And yeah, this is another one for anyone who's doing the visual here. This one's a little hard to describe just because there's so much text and columns, but check that one out if you really want to get into different features here. So like convertibility, dividend, the rate, the kind of whether it has Bitcoin upside or not, voting rights. There's a lot of really good information comparing the different vehicles here.
Yeah. I had the same thought. It's astonishing the quality that comes out on Twitter, and like in an hour you have institutional grade stuff. It's just there. It's not even worth, like, you just wait the hour, you get it. It's pretty incredible.
And some of the best stuff on Bitcoin treasury companies, leverage Bitcoin equities, is Ben Workman, Swan's chief investment officer, and he is part of the crew at True North and Hurdle Rate, which are two podcasts that cover all this stuff. True North, I think, is the most well known. It's MSTR True North, the full name. I think they're dropping the MSTR so they can focus, more broadly on things. But it's fantastic analysis there. Let's switch over to, so we're down to the bottom of the show here. Let's do some quick hits. We did title the show, I think, on YouTube, something about a triple top or a double top or something like that. We haven't even talked about it because obviously we don't think that's the case, but let's talk about why. Here's Ben at the Bitcoin conference in Vegas. No, actually, I think he's on CNBC or Schwab or something. Yeah, CNBC but recorded at the conference. Here's Ben's take on price.
Fundstrat's Tom Lee, he joined CNBC a couple of months ago, and he said that he thinks Bitcoin could hit $150,000 this year. Do you think that's feasible? What's your prediction?
I do. Yeah, I think it's going to get into the high 100s for sure. I would not be surprised to see it in the 225 to 250 range at some point. What you're starting to see is this really large structural bid coming in underneath it. And a lot of these corporations that are buying it, they're long-only buyers. They're not traders of Bitcoin. So they're using it truly as an asset to capitalize on the balance sheet. And when they do that, they're not intending to sell it. So you're seeing all this capital flowing into the markets and into these companies, and that's taking Bitcoin off the market. So when that float starts to shrink, but that buying pressure continues to increase, you can see some really explosive things happen in the price of Bitcoin, and that comes back to that inelastic supply to demand. It doesn't matter how much demand there is, there's no more Bitcoin coming to the market for them to buy.
Okay, which begs the question that is being asked quite a bit as well. Why are we still at 104 if all of what Ben just said is true, and we're seeing billions of dollars in Bitcoin bought on the daily into these treasury companies and other super bullish news? Why are we still stagnant here at 104?
When the
Saylor
rhetoric has changed
answered that
from
question recently.
The White House, and we have the strategic Bitcoin reserve and all these tailwinds, you're buying pretty much every Monday. Why is the price at 150 or 200K?
I think we're going through a rotation right now where lots of non-economically interested parties are rotating out of the asset, and a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market. And I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury company.
And we also have this HODL waves chart, which is one that I like, kind of fundamental chain analysis metric that you can watch. Unchained has been, I think, created this metric, Derivative Unchained, and so they post about it every once in a while. Here is Joe updating, saying, interestingly, 62% of all Bitcoin hasn't moved in the past 12 months. A level of holding behavior that closely mirrors the time just before the 2017 and 2021 bull runs, which this would seem to back up Saylor's assertion here that it's really people who are not holding for the long term or planning to hold for the long term or who are selling right now.
I think he's right there. And I think there's also like one other key data point that I've been vocal about. Of all of these raises, it hasn't been deployed yet. They haven't bought. You know what I mean? Like, you have announcements of billions here, billions there, billions here across 5 to 10 companies, but none of them have really started buying. Those plans are not in place. They're not in market. They're not like Saylor. They're not buying every week. It's still
just to be clear to everybody, these are like Nakamoto and 21 and Strive, like these announcements are, we intend to reverse merge or SPAC in with another company to go public. And then the plan is to take X amount of money and buy Bitcoin with it. But that stuff takes months to go through all the legal stuff to actually go, take an already public company, reverse merge with it if that's what you're doing, or SPAC. So that's why they haven't been made yet. So these are announcements of the intentions. That's what Steven's talking about. Just want to make sure that's clear. Yeah.
Yeah, there's a process there that you have to complete. And so the 3 big players you just named, those are the big announcements that we're going to see billions and billions coming in from. But they're still in the regulatory process, the merger process. And then you have a few other announcements. You have the Trump announcement. You have like Jet King in India. I don't know too much about it. It's a pretty big number. You have a few big numbers floating around. But of those, I think a vanishingly small amount of these total announcements have made buys. And so everyone's looking at, there's all this news, there's all these buys, but they need to realize these are announcements of future buys. And I believe that they will happen. That's not me saying, oh, maybe they're not going to do it, or they're like GameStop and they're going to like lowball it or something. I think they're all intending to deploy very heavily, but we're just not there yet. And, I think we will be soon.
Patience. I'll just make a general comment. I think anyone who has a good understanding of an investment that they're relatively early on, obviously it's not like 2011 days for Bitcoin right now, but it still is relatively early in terms of mainstream understanding and adoption. I think they all had moments like this. Like, let's just say you were an early investor to Amazon or Nvidia. You probably were wondering the same thing. You're like, this company's going to take over the world. Why isn't the stock like 100 times higher right now? And it played out. It was just that you kind of understood it before a vast majority of people did. So that is your opportunity.
Yeah, exactly.
100%.
We can see the writing on the wall here with all these companies. But the other thing is, let's be clear, the average market participant is not reading the press release for every one of these announcements. They're not sitting there like, oh, there's been 7 Bitcoin treasury companies in the last 2 weeks that are going to buy a total of $10 billion. They don't know that. We only know that because we're looking so closely at this. That's a theme I try to land over and over again, is I think less people are aware of what's happening here than we think. They will be, though.
Some people are focused on Coinbase rolling out access to Fartcoin.
Oh, yeah, this is the big news we held for the end of the show. Meanwhile, at Coinbase, they've added Fartcoin to the to the roadmap.
MicroStrategy better watch out. New competitions here.
Like, and Fartcoin's, I think Fartcoin's even been around for a long time. I seem to remember it. Like, you know, it's not a name that you forget easily. I'm sure I've heard of Fartcoin before, and it was years ago. So like, all of a sudden, it's Fartcoin was like making a big move, and it's time to be listed. Is that, I don't understand how this happened.
A big team of engineers, Brett. You can't just list access to Fartcoin all willy-nilly. You need to have the best software engineers in the world underwriting that integration.
Not to mention Subsquid. Very important not to overlook Subsquid.
Oh,
wow. All right. Bitcoin only, ladies and gentlemen. Bitcoin only is the way. I think that's pretty well been proven at this point to be the correct way to approach this industry. And the nice thing about it is, you know, if you are new and you've somehow found your way to some Bitcoin only content on the internet, you know, you can just not look at all that other stuff. Like, you don't have to go and research Fartcoin. You don't have to understand what it is, how it works, or what their claimed, you know, market benefit is. Like, you just don't even have to do that. Just accumulate Bitcoin. Might be a little bit more boring, but we try to have fun, you know, as Bitcoiners. We try to spice things up. The strategy is very simple, though. Buy Bitcoin, accumulate Bitcoin, and, you know, like, explore the other options. But I would even say, and I think John said this last week, if somebody asked me, I'd be like, you want to get into Bitcoin treasury companies? Great. I wouldn't play with more than 20% of my stack. Like, if I was going to convert some Bitcoin into MSTR, you know, I wouldn't do it with more than 10 or 20% of my stack max, right?
Yeah.
Just you hold your.
I think that's exactly right. I think the average person, if you're not like deep in the weeds on this stuff with a lot of years of being close to this market, you know, we're obviously talking about these companies because they're obviously exciting in some ways and they're doing very well, and, you know, they're Bitcoin focused, so it's easier to kind of, you know, speak positively about them. But for the average person, yeah, it's like your biggest position in your Bitcoin allocation should be spot Bitcoin. It should be 80% Bitcoin. Maybe you put 20%, or, you know, like, you figure that out. But that's the way to think of this. There are additional risks, and like, this is not a replacement for owning Bitcoin. You know, but it's also an exciting development, and, you know, something people have done well in. But you have to kind of keep the balance there and understand that, like, these are different risk buckets, and you want to size it appropriately.
I've always thought, going back to Fartcoin, sorry. I've always thought that was like a joke, like a made up thing. Like, people just made up talking to me like, oh yeah, it's just a Fartcoin. I'm like, yeah, it makes sense. Perfect example of a meme coin. But if a Fartcoin ETF gets approved, I'm quitting. I'm moving to an island. I'm living off a land. I'm over it. I'm done. I'm out.
Fartcoin ETF. Come on, man. An exchange traded Fartcoin. Is that what you mean? All right, guys, let's wrap this thing up. We've gone off the rails thanks to Coinbase. Happens. That's what Coinbase will do to you. So I just want to shout out real quick. BTC in DC, September 30th, October 1st this year. It's at the Kennedy Center, the historic Kennedy Center in DC, right next to the infamous Watergate Hotel. We'll be discussing the shaping of the future of Bitcoin and policy in a very, very important time and a very important place for Bitcoin policy. Also, check out Mara. Mara is the advancing the world's energy systems. They secure the Bitcoin network and they help support the show. And finally, check out Swan Private. Like I said, all three of these guys are with Swan Private. They provide expert service. They build strong relationships with clients. We get all kinds of amazing testimonials. Excuse me, amazing testimonials. We go out into the world at Swan Salon happy hours and events at conferences, etc. We do lots of in-person events, webinars as well, to really get to know our clients and have access to, or have them have access to everything that we can offer. Concierge service, institutional level liquidity, retirement accounts. We'll work on you with your Bitcoin treasury, tax loss harvesting, inheritance and estate planning, and more. We have helped over 5,000 clients in Swan Private accumulate over $4.5 billion in Bitcoin. Great security system. Put out some awesome reports. You can check out our Leverage Bitcoin Equity Strategy report that Ben Workman and our team put together, and of course the events that I mentioned. So check out Swan Private. Do you guys have a fun client story or something you want to share real quick to kind of illustrate what we do?
Yeah.
Put you on the spot.
Yeah. So, I mean, I've led the Swan private team since we started it in early 21. It's been just an absolute pleasure, and gotten to know thousands of clients, and seen. It's hard to like always pick out one story on a spot, but I have a this is to me a great story. I have a client who owns a roofing company, so he's probably in his mid 60s. He's kind of just been a blue collar guy, but owning the business, building the business. So he's also a business owner. They've done pretty well. And he did decently well for himself. I guess I'm not going to share any numbers, like, a good amount of money, but if you want to retire for the next 20 or 30 years, like, you got to watch what you spend, sort of thing. Like, not vacations all over the world and like a huge house, but like, you could retire. And he got into Bitcoin, at the kind of like high water mark of, not the high water mark, but like 40 or 50K in like 21, 22. And prices crashed after that, in particular during the FTX implosion. And it was down at like 16 or 17K. And I'd been helping him kind of navigate everything, work through it. And then he called me one night. It was like 8 p.m. at night. He called me and he's asking me, he's like, it's down to, he's lost 60% of his money. He put like most of his money in it. And he's like, I got to sell. Like, I can't, like, this is gonna ruin my life, I think. And I told him, I said, I really don't think so. Like, trust me, I've been through these. Like, it's a bad moment. Like, Bitcoin is actually fine. This has nothing to do with Bitcoin. It's fine. And we kind of talked him off the cliff there. He didn't sell. He built his conviction. He actually bought more. And, years later, he's sitting on millions and millions of dollars and a completely different trajectory for his retirement, for his family, for what life looks like. And, just something that, like, when you're new to Bitcoin or you haven't, there are things that happen that you may just have never experienced before. And just being able to talk to people that live and breathe this industry can make all the difference. Like that one decision was the whole thing. Yep. That one decision is worth more than every other decision. If he had sold there, he'd be at a huge loss. He didn't. He's now like, hundreds of % gains.
Amazing.
And he probably never would have forgave himself, right? He would be thinking about that every day. That's an awesome story. I won't I won't top that, but just as kind of a general comment, I'll say, you could get this from Steven's story for sure. Think of Swan Private as like a partner for something, just like, hey, what's going on in the market now? I need a second opinion. Walk me through what you're thinking, something like that. But also, if you just want to learn about some of the things Brady was talking about, what should I look for in a platform? What type of an account should I have? What type of custody setup should I have? I want to get a loan against my Bitcoin. What should I look for? I'm worried about my heirs and my wife or my spouse getting my Bitcoin in the future. That's just a portion of the things that we can help with.
Yep. Every single person at Swan is a diehard Bitcoiner. We are on the mission because we believe in the hope that Bitcoin promises for us all. And so we would love to have you or be a part of your Bitcoin journey. Matt, do you any words about Private before you wrap up?
Many such cases. There's a wonderful older woman, a client of mine, who's so sweet. She's late 70s, and her daughter's probably my age, and was very skeptical and worried about her mom. And she stacked pretty hard in the 20K, 30K, and she put the work in. She took the time to learn about Bitcoin. And so I've had meetings with this woman and her daughter together, and going over kind of what her Bitcoin portfolio looks like now. And, seeing her daughter's eyes just go, wow, like, okay, that's interesting. Maybe I'll take this a little more seriously and start learning. So now she's kind of getting into Bitcoin, which is super cool to see. So yeah, just love what we do.
It's awesome. It's awesome. All right, y'all, find us at swan.com/private for that page I just screen shared. And you can click meet with us, and you'll get on one of these guys' calendars and just, ask some questions about what we're about. No pressure on that call whatsoever. But we would love to hear from you. We'll see you all next Friday, again, 11 a.m. Pacific. We do 2 p.m. Eastern. We'll be back with John and Steven and another member of the Swan Private crew. That's it for today. Everybody have a great weekend. Bye-bye.
See you guys.
Peace.
Bye.